Good morning, everyone. Today I'm here speaking with Ian Dixon. Ian is Access to Finance Advisor within the Greater Manchester Business Growth Hub. Welcome, Ian.
Good morning. Good to be here.
Oh, it's great to have you here. Thank you for agreeing to sit here today with us and speak about raising funds for startups, scale-ups, and SMEs. Ian, for people that don't know you, can you share with us a little bit background about yourself and what you do?
Yeah, absolutely. Well, many years ago now, Arthur, I qualified as a chartered accountant, and like a lot of chartered accountants, escaped the professions post-qualification, was involved in a number of private commercial businesses, was very fortunate in my career in that some of those businesses went on to substantial transactions. So in my late 20s, part of a team that obtained a flotation on the London Stock Exchange. Subsequent to that, went through acquisitions with much larger PLCs, etc. And eventually led a management buyout of a Greater Manchester-based manufacturing business. So exited that business round about 14 years ago now. Had an experience with a little bit of business angel investing, Arthur, but very quickly realised my pockets were not deep enough to sustain that activity, and really crossed the divide into what we now call advisory services. And those advisory services originally were under the old Regional Development Agency through the auspices of Business Link Northwest. That has now transferred into what we call the Greater Manchester Business Growth Hub. So that's who I represent today, Arthur.
Oh, brilliant. Thank you for this amazing introduction.
No, my pleasure.
So you are very familiar with building, scaling, floating, investing in businesses. I have a question for you then. Can you share with us what's the most memorable pitch you've been part of and what made it stand out?
Okay, fantastic question. I think probably the most memorable pitch was a business which was providing a service to motorists, and they were providing a replacement tyre service. But at that point in time, the market was dominated by some major brands who were really what we now call bricks and mortar businesses. So you had to physically go to a location to obtain that particular service. This service was actually innovating in that they were doing a mobile service for you. And I think what was memorable about the pitch was just the innovation around the business model. For me, the quality of the management team, their experience, what they'd done, what they'd attempted to do within a commercial and organisational context and been unsuccessful, which is often a common theme that we both hear, of course. And the fact that they were so passionate about what they wanted to do, etc., and they were able to communicate that passion through a presentation that was, in essence, a very simple presentation. So weren't making many detail points, etc., but created that engagement, that bridge with the investment audience, and went on to raise very successfully, I have to say. And that's a business that subsequently has scaled successfully as well.
So that brings a really interesting point. So what I'm hearing here is that the communication and the way you present your business, it's something that drives the excitement.
Absolutely critical. You've got an opportunity when you pitch an early stage business to demonstrate your passion, your enthusiasm for what you're doing. And for early stage businesses, let's face it, if we're honest, there's a huge risk from an investor perspective. And often that investment decision, even though we don't always communicate this effectively, is largely driven, 80% plus by the entrepreneur who's presenting. We are trying as investors to gauge the credibility of the investor. We're trying to build that trust in the investor relationship, because without him, her, or the team, if it's a team, then often you can't execute against a business strategy, and that team is absolutely critical. So the ability to communicate clearly is so important.
Yeah, I hear this all the time. Founders who are like a resourceful, who can communicate clearly, they not only attract investors, also like a great team. and partners and clients and so on. So a follow-up question to that would be, that was a great pitch, a great example of the business who impressed you with their pitch. Have you come across a business where you thought, no, that's never going to work, but they actually raised a significant round in the future?
I have. I mean, because my background is technology and manufacturing businesses, I probably have a perception of what may or what may not work. Where perhaps I struggle sometimes is with more creative businesses, and I've got sadly too many examples Arthur, of where I felt a creative project would struggle to get funding away, but obviously when they've communicated with the investor group, they've created that bridge. There's been a resonance with the investor, a connection with the investor. So, one of the most notable projects that we've worked on was actually a feature film, Arthur. And it was a fascinating story about a young girl from a working class background, a northern-based town, who actually used the medium of music to help bring her out of herself, develop herself. She actually, ironically, went on to become an award-winning photographer. So working for people like Condé Nast Traveller, Vogue, etc., Harper's Bazaar. But her story was then subsequently made into a feature film, which some of our listeners may know, called Northern Soul. Absolutely fascinating. We tried unsuccessfully here in the north to raise money for the production of that feature film. Her perseverance, her commitment to that project meant that eventually they did raise the money. Now, they didn't raise the money in the UK, but that's quite common for a lot of creative projects. It was actually based in North America where they raised the money. But if people haven't seen that film, Northern Soul, I highly recommend it. And the lead is played by a singer called Lisa Stansfield, who, again, I'm sure a lot of the listeners will be familiar with.
Oh, brilliant. Thank you for sharing this story. So that's
cool.
like quite special, like, especially with the creative businesses.
For me, it's a very memorable one, and creative businesses can often be the most challenging, Arthur.
And then, like, from your observations, Ian, like, what are the unique trends you're observing in Greater Manchester right now when it comes to fundraising scene, especially related to businesses who are not necessarily B2B SaaS, which is the most common category?
Yes, yeah. Well, I think in terms of general trends in the marketplace, what I would say on a generic basis is we're seeing an increase in the volume of startups. So there is no let up, no reduction in the appetite for, particularly younger entrepreneurs. And by young entrepreneurs, I mean the sub-30 age group typically, to establish and set up business. And, in part, I guess that's driven by the fact we have a fantastic academic base here in Manchester. So we've got not only Salford University, where we are today, but equally we've got Manchester University, Man Met, and we've got Bolton University. And there's an incredible pool of talent within those universities that certainly is fueling the growth in the startup community at present, together with areas of what you or I would call sectorial expertise. So, we have what we call the life sciences corridor. So from Oxford Road all the way down to Alderley Park in East Cheshire, etc. And again, we've got a fantastic repository of knowledge, experience and skills there. And that in itself becomes self-perpetuating, because the fact we've got these talent pools is attracting new businesses to Greater Manchester. So for me, that's a key driver, and that's what we're seeing in the early stage at present.
So to ask you a follow-up question to that, which I'm being asked frequently by founders, when it's like your first venture, you're a young entrepreneur and you don't necessarily have like 10 years of experience in the industry, and you want to raise, but you're in this like a chicken and egg sort of position where you need more experience, but you're like still in your early 20s, and you need to raise a significant round. Like, do you have any advice for this first-time entrepreneurs? raising funds?
Absolutely. I think, what I would say, and this is true of life in general, not just early stage fundraising entrepreneurs. For me, it's not being afraid to ask questions. There are no such thing as stupid questions in my book. Sadly, there are plenty of stupid answers that you may receive. But I think the key thing from my perspective is for people to reach out, engage, and understand that across Greater Manchester, we have a fantastic repository of knowledge. So, here at the Innovation Forum, you've got Oxford Innovation, you've got your own skill sets, you've got your networks, your colleagues who are also working across Greater Manchester. I work for an organisation, the Greater Manchester Business Growth Hub, where absolutely when I was involved in my commercial activities, I wished I'd have had access to an organisation and known about the level of support that's there. So for me, it really is to encourage all entrepreneurs to reach out for support at the earliest possible opportunity.
Brilliant. Thank you for that, Ian. Okay, I have a few more questions for you.
Sure.
I'm so lucky to have you here today, sharing all this wisdom. And I have a question for you. So Greater Manchester is very often mentioned like a high growth region, especially in the investment. And last year, when I looked at stats, it was around £250 million invested in Greater Manchester, like startup scene, like
Yes.
angel venture capital funds,
Mhm.
versus 7-something billion in London.
Yes.
And there is a lot of competition here in Greater Manchester, competing for every investor pound. How do you think Manchester is different to other regions in England, London, and maybe some other regions you can see when it comes to investment?
Yeah. Well, I think one has to start with looking at the heritage of Greater Manchester. We are and have always been a city of innovation and progress, and in my mind, that continues to this current day. Whether or not we look at something like graphene and what graphene's done, not just for Greater Manchester, but on a global scale now. And I think Manchester has always fueled the creation of entrepreneurs. It's always championed entrepreneurship. And what we now see is a lot of those entrepreneurs who perhaps have built those first businesses, who've exited those businesses, or may still be engaged with a business which effectively is generating surplus cash. And they're still wanting to reinvest. They're wanting to put back their knowledge, their experience, and their skills back into the startup community. So I think that's a fantastically powerful driver of the innovation we see. Your question quite rightly highlighted the disparity between the investment levels in the southeast and the investment levels in Greater Manchester. And I think, sadly, we still have to climb on that train to go down to London, probably too often, but certainly in terms of what we see from an early stage investment perspective, we see more and more of those southeast-based investors reaching out to businesses, entrepreneurs, founders across Greater Manchester. Certainly in terms of the number of funds who are active across Greater Manchester, Arta, we've seen almost an exponential growth over the last 5 years in interest. And the factors that I talked about, whether it be areas of sectorial expertise, etc., the level of knowledge and research that's coming out from academia, all of those are driving that increased connectivity and that increase in investment in the region. And of course, the fact we are, again, I make this as an apolitical statement, but the fact we are now a devolved local authority, credit to the 10 local authorities that they coordinate fantastically well. So we've not got issues of duplication, replication, dare I say it, competition that some areas of the country do have. So I think that's allowed Manchester as well to sort of advance, above other regions.
Oh, brilliant. I love that. Thank you for that, Ian. And I think it's also worth mentioning, like whenever I speak with founders, first-time founders mostly, I very often come across questions where do I even start? Where do I even go to raise my first dollar? How
Yeah.
much should I raise? Like, what are the good outlets, like places,
Yeah.
people to connect, organizations to connect
Mm.
within Greater Manchester,
Yeah.
or maybe even beyond? Like,
Mm.
would you recommend people going beyond Greater Manchester when they raise finance?
I think a consideration of moving beyond the geographical boundaries of Greater Manchester is absolutely critical. The reality of early stage investing is, you have to develop a resilient mindset as a founder. You will hear no much more than you hear yes. And I always say to founders, well, actually, it's then the next question that you ask is critical, because if it's a no from an investor, do you understand why it's a no in this particular instance? And that's part of your learning journey, isn't it? I think it was famously Einstein's definition of madness is doing what you've always done, but perhaps expecting that different result. So resilient mindset, asking lots of questions is absolutely critical, from an entrepreneurial perspective. In terms of where does one start that journey, which was your original question, Arta, it's often been problematic because there are so many sources of support across Greater Manchester. We haven't always been the best at creating that visibility. If I focus on my own organisation, the Greater Manchester Business Growth Hub, we've recently recognised some of the issues you've been talking about, and we've created a website called Simplify. So, as a starting point for any early stage founder, entrepreneur, Simplify might be an appropriate entry point into the ecosystem. Now, it is just a web footprint at this point in time, but it does contain a lot of information. But importantly, it contains information about what your next steps might be. So, again, a shout out to my own service, the Access to Finance service. We're an advisory service. We're fully funded. Some of my colleagues used to say it's free service. Well, I prefer not to say free because, as you well know, the most precious resource any early stage founder, entrepreneur has is their time, and they have to respect that time. So, working with an organisation that provide fully funded business support, you're investing your time and energy. But from a very practical point of view, the Access to Finance service has only two priorities. The first is to support that entrepreneur, his or her business, become investment ready. And as you know, that's a huge topic depending on the particular type of funding you're looking for, or more commonly, the blended portfolio funding you're looking for. And the second priority is to help address some of that complexity in the marketplace we talked about. And effectively, we hopefully will become a satellite navigation aid that puts you in front of the right funders, right investors at the right point in time, so that you don't have to have too many of those blind alley conversations, as we often refer to them. So access to finance is a great starting point. And of course, we are an entry point to a much, much wider ecosystem. I referenced earlier that the depth of experience and knowledge, not only amongst my colleagues in access to finance, but across the wider advisory base within the GM Business Growth Hub is phenomenal. So those conversations invariably spark opportunities to develop further conversations, to make new connections. It's exactly what you guys here at Oxford Innovation do incredibly well.
So I have two follow-up questions here for you, Ian.
Yep.
So the first follow-up question is what would you say to founders that come to you and they're like, don't have time resources to really commit to the full program? Can you just look at my business and run introductions for me, please?
Yeah. So at one level, because we are advisory, we're not precious. We work with clients where it's a very brief exchange of information, Arta. So, we might have a conversation that could be a 30-minute, an hour conversation, and that delivers the appropriate value to that particular client. Other clients who need a more intensive level of support, they may need help on what you and I call the fundraising assets. So they may need help on a pitch deck, a set of financial forecasts, they may need help with crafting a fundraising strategy. So, what's the valuation of the business? All topic that might be a separate podcast for us. How should they be using some of the HMRC incentives? So, hopefully most of our listeners are familiar with things like the Seed Enterprise Investment Scheme. If you're not, and if you're looking to raise money, I urge you to go and do some research on Seed Enterprise. It's a huge driver of investor behaviour and a huge driver of ultimately decision making in the early stage marketplace.
Oh, brilliant. Thank you. So I have a few more questions for Ian. So far, I really enjoyed this discussion we're having here.
Me too.
So what's a piece of conventional fundraising wisdom going around in the market that you fundamentally disagree with?
The one I often come across, and the biggest fallacy, if I may use that strong adjective, it's actually the need to have a detailed business plan. The one thing that any of us who've perhaps been through our own business journey, work with early stage entrepreneurs, is to know that if you are too prescriptive, if you are too precise on your business plan, you're probably going to lack agility, flexibility. Actually, having an establishing, growing, positioning an early stage business is all about agility. And what investors are looking for are entrepreneurs, founders who are going to recognize opportunities, recognize problems, but walk towards those opportunities, walk towards those problems, and effectively execute a strategy that allows them to take advantage of that situation. So anybody who insists on having almost a hard-coded business plan, I have to shake my head and say, well, look, that's not what investors want. That's not how they approach the decision-making process.
Okay, brilliant. Okay, so the second question I would have for you in this space, founders are very often said that they need to do everything, right? You need to do networking, fundraising, you need to build product, you need to market the product, you need to do sales, and this is like a job for 5 people on its own. And very often the businesses is just like a one individual or like 2 founders, just like trying to get things off the ground. Which categories you think are the most important if you were to list them?
Okay. Well, let's be honest, they're all important. And the reality of being an early stage founder is that you are all of those things and possibly more as well. So it is a very sort of complex environment in which you operate. From my perspective, the advice that I always give to founders is don't underestimate the amount of activity and time that you're going to have to invest in networking. Networking is critical. I mean, I often say to founders, it's what I call serendipity. Actually, the more conversations you have, guess what? The luckier you're going to get, etc. And I sometimes, have conversations or come across founders who, in some way, want to shortcut that process. Fundraising is not a quick process. It's a process that does require time and effort, whilst obviously all of the other areas, whether it's developing product, commercializing product, or innovating around an existing solution, are important. But they all have to be activities that you undertake. One of the interesting areas, and I often find myself talking about this with a lot of founders, because we come across, you and I are familiar with the process of due diligence, where effectively if an investor or a funder is interested, they will do a more detailed piece of research on the business, etc. I always have to remind founders that due diligence is a two-way process, that every single investor, every single funder will anticipate that there are problems within your business, there are gaps within your business. I believe it's important that you're transparent, that you do highlight these, you don't try and relegate them in terms of your pitch deck, because within these problems or opportunities, potentially that's where investors can visualize where they can add value to your proposition. And that's hugely important. So coming back to the point about due diligence, I always encourage founders to do due diligence on prospective investors and funders. So, at one level, it might be as simple as speaking to a portfolio founder who the investors invested in. Understand what the fund's position is, understand where the fund can help you with some of these problems, understand how the fund might help you address some of those commercial challenges, whether that's because of the knowledge, the experience of the fund managers, the investment managers, directors within the fund, or access to funders' either current invested portfolio or alternatively investments they may have exited. They're a huge repository of the ability to network effectively.
Brilliant. Okay. That's a great list of things to get prepared when it comes to just checking if that's the right investor for us.
I think so, and again, it comes back to that point I talked about having conversations. There's no shortcut. You have to have that direct dialogue. With the best will in the world, people like me in an advisory capacity can hopefully guide you on that journey. But ultimately, it comes down to the quality of the conversation that you curate with investors and funders, because those conversations are building those two fundamental building blocks we talked about at the outset, which is credibility and trust.
So on due diligence, I got asked by a founder last week at one of the events. Not going to tell the name of the event or the founder, but the question was on due diligence of funds that still have available money to invest. So it's a bit of a game from what I'm seeing when there are funds showing big numbers or smaller funds with smaller numbers.
Yes.
But they're not necessarily have funds available, but they still drag founders on a journey.
Yes.
So what your advice would be to those founders? How do you do due diligence on public information?
Yeah. It's a huge frustration for founders. We have the expression that a lot of investors, funders like kicking the can down the road. They almost don't want to say no, but they can't commit to yes. There's that almost FOMO, fear of missing out on an opportunity. What I always say to founders, entrepreneurs is, there's a huge amount of information now that's effectively in the public domain. Either through some of the paid databases like Bohurst, PitchDeck, etc., or even direct from the funder's website. So you can very quickly get a feel for the quantum of investment monies that they have. So, and that is driven by the life cycle of the investment fund. So as a fund reaches the conclusion of its life cycle, it's likely to be much more difficult to prize funds away from that investor, because there's always an element of those funds that are kept back for follow-on investments in portfolio investments. You can also get a feel from some of the sources we talked about the regularity of deal flow. So we regularly see funds who have an explosion of activity. So they may well be undertaking 10, 20 investments in a calendar year, but what you then find out is that they've exhausted the quantum of their funds at this date. And then you're into the difficult conversations of we're interested, but we're fundraising. Now, the one feature of the marketplace at present that we will both recognise, Arta, is it's actually very difficult to raise new funds in the market at present. I think there's a level of activity around some of the SEIS funds, so the Seed Enterprise Investment Funds, because of the accelerated tax incentives that make fundraising more attractive at the lower end of the marketplace. But certainly for the larger, the scaling business who's perhaps looking for that level of investment, 250, maybe even 500 plus, we're absolutely seeing a slowdown in that marketplace. And that in part is driven by difficulties in new fundraising and the fact that, again, VCs have an expression, dry powder, that in some instances they are keeping reserve capital for that follow-on investment in existing portfolio companies. So research is the key answer.
So it sounds like it's a lot of work on research, on networking, on making sure that your documents are like in place, that you communicate clearly. It's so much to do. So,
Absolutely.
what are some workshops or courses, possibly including your own, Ian,
Hmm.
that you would recommend to someone looking to learn more about fundraising?
Yeah. Okay. Well, I mean, with obviously the growth in access of assets on the internet, there are some fantastic repositories which people can do. So, at one level, a simple search of YouTube, etc., can highlight some fantastic resources. And I know Oxford Innovation, are regularly posting um, assets information that will be of use in those circumstances. People like the UK British Business Angels Association actually release into the public domain a lot of really useful information for founders, entrepreneurs. There are organisations such as Cedars who regularly do 30, 45-minute webinars, etc. And for founders who need that more detailed understanding, there are courses. So in 2021, 22, and early 23, we successfully ran a course called Pathway to Equity, which was a modular based course covering everything from what is equity right for my business, etc., all the way through to creating those assets, pitch deck, financial forecast. We explored in detail factors such as valuation and how does one value an early stage business that's often pre-revenue. And the reality is, if you do that alone on the basis of financial forecasts, you probably are not going to arrive at a valuation that bears any relationship to the reality of where investors are in the marketplace. So it's often driven by what we call qualitative factors. So factors that I talked about: the quality of the management team, the experience of the management team, your intellectual property, in certain instances, the sector that you're focused on in the marketplace. We all know that for the past 12 months, anything and everything's had an AI tag attached to it because it's perceived to be attractive to investors. So factors like that always come into play as well.
Brilliant. Like some of the things which I'm finding as well quite interesting is just speaking with other founders as you go to events and
Yeah,
just ask who was helpful on their journey raising
absolutely.
funds.
Yeah, and that's a great point. Absolutely, and that comes back to almost that due diligence that we talked about
Mm.
being a two-way process. You equally need to do that on your prospective investor, your prospective funder, and in many ways, who better than to speak to somebody who's been through that investment journey with them, or somebody who's engaged in that investment journey. And there will be, sadly, as in any market, a huge discrepancy between the support, the advice, and importantly, the feedback you receive.
Mm. Okay. Thank you. And I have one last question to finish off.
Okay.
Because before this interview, you shared with me a list of potential places where people can raise
Yes,
finance, get some funding.
absolutely.
Can you tell me a little bit more about this list?
Yeah. Well, the list effectively came out of our earlier conversation where we were talking about non-commercial sources of funding in Greater Manchester, and back to what we talked about, Greater Manchester being coordinated and innovative in its approach to funding. We have what some commentators call the Greater Manchester funding escalator. So there are a number of public sector sources of potential funding support in Manchester. So um, the Greater Manchester Business Growth Hub has a specific organisation called GC Business Finance. So GC being the growth company, Business Finance, and they have a number of funds under management. So at one level, they are responsible for the delivery of the British Business Bank Startup Loan, which is an absolutely fantastic product and has helped so many founders here across Greater Manchester. And that's available for lending anywhere between £500 at one level all the way up to £25,000. And for some management teams, it can be beyond that because the loan itself is per director of the business as opposed to the business itself. So potentially you could have four contributing directors. So at one level, you might say the aspiration could be £100,000 through that product. It goes out to marketplace at a very competitive rate of interest. It's at 6% per annum. So, dare I say, it is incredibly competitive with not only where some of the commercial lenders are in the current marketplace, be they high street banks or private lenders, and even some of the public sector backed products. So that's the startup loan at one level as an entry level product. GC Business Finance also has a portfolio, so they have a growth loans product as well, which is potentially suitable in certain instances for pre-revenue businesses, but predominantly is focused on what we call post-revenue, more established businesses. They also have under management an export fund as well. So for businesses that are looking at taking that next step towards internationalisation, there may be a source of finance that helps fuel that growth as well. I've talked about debt bases there. The final piece of the debt equation from GC Business Finance is they're also a fund manager for part delivery of what we call the microloan program, part of the Northern Powerhouse Investment Fund, which again has made a huge impact across the wider Northwest region, and loan facilities are available up to £100,000 there for early revenue established businesses. From an equity perspective, we also have an organisation called GC Angels, which is under the GC Business Finance banner. Now, GC Angels have their own investment funds, and typically they're able to deploy check sizes into equity raises of anywhere from 50k to 150k. Now, their model is very much a co-investment fund, so they will not invest 100% of your ask. They work on effectively a leverage, and typically the leverage is 5 to 1. So, if you're a founder who's looking, let's keep the maths fairly simple, to raise £250,000, then realistically you might expect someone like GC Angels, if they have the appetite for your particular proposition, to invest 50 to 100. But more importantly, what they then have is a network of investors who will co-invest alongside them. So at one level, that's a very attractive proposition. They also have an extensive network of what we call high net worth individuals, so business angels, who are predominantly based in and around the Northwest. And they're investing their own individual money into these propositions as well. And in those instances, check sizes can go, we work with investors who will say, my maximum check size is 25,000. So there's a scalable appetite there across that. And then if I look again at sort of public sector sources of funding, outside of GC Business Finance, GMCA, so the Greater Manchester Combined Authority, also has what's called the Greater Manchester Investment Fund. Now, the Greater Manchester Investment Fund typically is at a different scale of operation, but they can look at equity-based propositions from 250. Also look at, for established businesses, debt-based propositions, but their check size can reach up to 5 million. So it's a substantial reach within that environment. And I'd be remiss if I didn't also mention another of the Northern Powerhouse investment fund managers, who are FW Capital. They have a debt-based solution for businesses, and their solution scales from £100,000 all the way up to £750,000. So you can see there's a real opportunity to engage across a broad spectrum of Greater Manchester specific lenders. And the final fund that I'll name check is actually managed by Maven Capital Partners. So they have responsibility for the delivery of the Northern Powerhouse Equity Investment Fund, and their check is again a huge spectrum. So at the low end, they can invest £50,000. I suspect because of the economics of a venture capital fund, they're not investing at that sort of level. But again, equally, their check size can stretch to 2 million. So it's all of these are valuable assets, additions to to the funding environment. And the majority of those are very specific to Greater Manchester. So reinforcing the opportunities for for founders and entrepreneurs here in Greater Manchester.
Brilliant. Thank you, Ian. We're going to attach this list to the interview in the
Perfect.
article and social media posts so everyone can get it. Ian, thank you so much for speaking with me today and sharing all these insights about fundraising. And I hope to have you here again at some point.
Perfect. No, thank you for your time. I've really enjoyed the experience, and hopefully your listeners, viewers will find content of value to them here.
Brilliant. Thank you, Ian.
Thank you.
So we got it.